Welcome back to the NFL Players Podcast. I'm your host, Zach Miller. And for this week, as we're getting closer to tax time, we're going to do a little tax walkthrough. And it's obviously important to athletes because it is the biggest expense you'll have. Your tax bill is something that is unavoidable. You can't pay zero taxes. It's going to be the largest expense that comes out of your pocket. So it's wise to pay attention to it and to develop a strategy so you can use your wealth for greater impact. And so before we do that, just want to touch on a little bit about, free agency is going to be coming up next week. So we'll cover a little bit of that next week. I got a chance to be a free agent back in 2011 during the lockout shortened season. So next week we'll run through the free agency process and what it's like and how you can maximize your next contract and really find the team that can help you win. And then before we dive into taxes too, I want to talk a little bit about how Tom Brady has performed and why you can have the best strategy, the best coaching, the best football strategy in the world. And if you don't have the players to execute, if you don't have the talent, if you can't get it done on Sundays, those plans don't mean anything. And I think that applies perfectly well to wealth and wealth strategy. You could have the best wealth strategy, but if you don't execute, if you don't do the things necessary to grow your wealth, then you're going to fail. You'll lose all your wealth. You'll run out of money, or you just won't have the impact in life that you want to have. And so I think about my own situation is I could, do all this tax planning. I could do all this strategies with investing and looking at private equity or looking at public markets. But if I don't execute on that strategy and it's just a recommendation and it's not executed, then you're going to fail and you're not going to have the best outcome that you deserve. And so as much as coaching matters, as much as planning and strategy and all that does matter, it's up to the individual to execute it. There's so many guys I've played with that, should have generational wealth, that should have, be set up for the rest of their lives. And the fact of the matter is that they're just not. They didn't execute. And, part of that's not having the right advisors and not having the right type of planning, the right type of financial planning, the right type of wealth strategy. They didn't get that, but then they also didn't execute where they could have maximized their human capital and, become a better football player on the field, or then use that money off the field for to really set themselves up and their kids up for generations. So all that, I think, really drives the importance of you got to have the expert advice, the expert planning, and you have to marry that and coordinate that with the execution by the individual. And when you do, you can really set up generational wealth. And that's my goal with the wealth I've been able to create. And I think that should be the goal of every NFL player, because I know that I've had so many surgeries since I've been done that you really are sacrificing your health for wealth. Your body is going to feel the toll of football for years later in life. You're going to have knee replacements, joint replacements, and that's just a fact of playing the game. You're in essentially a car accident every Sunday, and so you need to understand that. And wealth is really tough to hang on to because it's not something that is on display. You can't see wealth. You can see nice cars, you can see what people spend money on in nice houses, but you can't see wealth. So role models are tough to find. So I really suggest that you educate yourself on the proper way to build wealth and then maintain that wealth for generations, because so much of your body is sacrificed at the altar of the NFL that you deserve to have that wealth later in life and not have it disappear on you, or not have it create the impact that you desire for later in life. And so I just strongly encourage to take ownership of that. Don't cheap out on hiring the right kind of advice. That you get what you pay for sometimes, and it's not always true everywhere, but a lot of times you do get what you pay for, and you have to find the right team of professionals to help you build that wealth, and then you have to go out and execute that strategy. And that's what we do here when we build plans for our athletes, and we make sure that we go after the goals that they want and create generational wealth for them and their families. So with that, income tax is obviously a hot topic right now. I've seen so many commercials for TurboTax and all the tax filing and tax compliance type side of the business, but that's not really where any value is on the wealth side. You really need to do tax planning and tax strategy. And there's so many advanced strategies, but if you can't do any advanced strategies without first tackling the basics. So I actually brought in one of my old W-2s and pay stubs from while I was with the Seahawks. And so obviously your biggest line item, federal income tax, that comes right out of your paycheck. And then you have FICA, you have, your Social Security and Medicare. Those are another big line item that are going to come out every single year. And so all those together are really your biggest expense as an athlete, and you're going to be in the highest tax bracket. That highest tax bracket right now is 37% federally, and then depending on what state you're in, you're also usually going to pay state income tax. And then the big issue with that is also that you really need to understand that there's so many different strategies of being able to defer, or as we say, delay your taxes into future years where you're not in those high income tax brackets. And I think the top tax bracket with President Biden will probably likely go back up to 39.6, like when I was playing. So you really need to do what you can to mitigate those taxes and try to delay them into future years when you're in a lower tax bracket. And so really running through your W-2 that you should have got from your NFL team already, take a look through that. Just try to understand a little bit about your tax liability, what that is, how much is getting taken out, your average tax rate, I think is all important that any NFL player should be able to understand that. And then you can, start finding strategies to try to mitigate some of that so that you can actually use your wealth for the greater impact that you desire, whether that's, sustaining a certain level of spending later in life or, donating to charity through a donor advised fund. These things are all strategies that help you defer or delay taxes later into life, or lower your tax bill and create the kind of impact that you really desire. So also this time you're going to be getting the 1099 statements from either taxable brokerage accounts, interest bearing accounts. So those are 1099. INT, DIVs, and then also your 1099 miscellaneous and non-employee compensation. Those ones will be coming too, and that's for your off-the-field income. And so but really what you can do with that, and we've done this on a previous podcast, I suggest you go back and listen to that one, is the individual 401k to delay those taxes till later. And if you're in a low enough tax bracket, maybe you bounced around from a couple NFL teams, you were on the practice squad, something like that, it might make sense to do a Roth version of the individual 401k. And that really is just, you pay taxes now so you don't have to pay them later. And it's really, all Roth accounts, and this includes the Backdoor Roth IRA that you should be doing every year that you have earned income in the NFL. I missed out on it as a player, and the earned income that you can put into a Roth, that you're paying the taxes now, and you can do the backdoor so that you're already going to have to pay taxes on it, and you might as well go ahead and put it in an account that can grow tax-free. And then when you take it out later in life, you've already paid the tax on it, so you don't have to pay it when it's withdrawn. So I think those are strategies that while they may not seem like a big deal at the time because the dollar amounts can seem small relative to your paycheck, the amount of compounding, which one of our advisors, Josh McAllister, he just did a compounding blog about compound interest and how it can just grow to enormous wealth over time. And I think you should really check that out. It's on our website, but it's something you just got to understand that once, those little amounts each year that you're in the NFL can add up to huge amounts, when you're 60 years old. And that's, that gives you the flexibility to delay and defer taxes as much as you can, because that's the ideal goal. Is so much of your income is front loaded, and you're going to have to pay such a large amount of tax up front that you have to do what you can to spread that tax bill out over your lifetime, because you'll never have those kind of earnings, or very few people will have those kind of earnings that they have when they're playing later in life. And so you can really have some strategies there that will, help to mitigate some of that tax bill, and then, defer that into the future. And then another strategy also is the donor advised fund I mentioned earlier. A lot of people think of that setting up a foundation is the best way to do it, but there's a certain amount of assets you need to have before a foundation even makes sense. And so with a donor advised fund, you really get to use your wealth for the most impact, because you're saving on taxes by donating appreciated securities, and then also getting to deduct the value, the fair market value of that security. So some of these strategies can really help to lower your tax bill while also being charitable and giving the amount that you want to give. And so there's smart ways to do it. The tax code is literally written by Congress to encourage these type of things. So you should be doing them. You should be taking advantage of these strategies so that you can make the greater impact you desire. And another one is real estate is the baby of the tax code. There's certain, whether it's a mortgage interest deduction or the preferential treatment of 1031 exchanges and that sort of thing. And there's just so much in the real estate code that can be an advantage to you. But a lot of people, don't realize you're phased out from the mortgage interest deduction at $750,000 and these sorts of things. And so, you have to understand that real estate can make sense, but there's a lot of intricacies and nuance that you have to understand that if you're not getting, holistic financial structure advice, you might be really inefficient. I know I personally was inefficient with my real estate and it just, it was not a strong generator of wealth for me. So, and the other thing I wanted to mention when it comes to real estate is the fact that a lot of the return is generated from sweat equity. It's the time and not just money put into the project, but it's the time and the know-how and a lot of knowing how to get things done, whether it's adding value in a real estate investment, that's where the return comes from. So if you think you're just going to put money into a house and it's just going to appreciate, it's usually not the best way to go. If you really want to have access to the real estate market and get those type of returns, you just go with a REIT. That's much easier, much more liquid, and it's you don't have to spend as much time. It's really truly passive income. I just be careful with the real estate. I know that's hawked by a lot of the armchair financial advisors, and it's usually not the best way to build wealth. And then one other thing that I actually did a poor job of, because I had a financial advisor, was just a broker and didn't give tax advice, was asset location. And asset location just means take tax inefficient assets and put them in deferred accounts, whether that's a 401k or anything like that, and then take your tax efficient assets like muni bonds and put those in your taxable brokerage accounts. So that's one thing that really should be part of your financial structure. And it's something I did a poor job because I didn't have the holistic financial structure run by a team of wealth professionals. I had segmented CPA, segmented broker, and relying on family to do things that you really need a professional team to do. So with that, I think we'll wrap it up. And thanks for joining me, and I will see you guys next week. The information in this podcast is educational and general in nature and does not take into consideration the listener's personal circumstances. Therefore, it is not intended to be a substitute for specific individualized financial, legal, or tax advice. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a final decision.